Hello, traders. Sorry about the delay here. There was a lot to do this morning as a result of the rollover, and as much as I prepared last night, there were still things to do. Thanks for joining me today. It is 8:05 right now, Chicago time, on a beautiful sunny day. Um, It is Thursday, rollover day for U.S. equity indices. I want to remind everyone that we roll to March today. Officially, many traders will will wait till tomorrow when the volume has moved into the March contract. I roll with the exchange simply because my software and back adjustments and all that stuff happen today. And so I moved to March. It doesn't make a difference. I'm not trading large enough, not like I used to at least, to be affected by the lower liquidity. And a lot of the metrics that I use to read order flow are impacted today anyway. So I just get it over with and roll today. But many people will decide to remain in the December contract or the December expiration through tomorrow afternoon or through to end the session tomorrow. However, if you decide to roll, these are the official premium adjustments. Very important stuff to understand. The December contract settled at 36.7250 in the ES. The March contract settled at 36.64 and a quarter, giving you a premium of negative 8 and a quarter. The product is in backwardation. 8 and a quarter, which means that all of your prior data, whatever data that you pull, 20 years of it, if need be, has to be adjusted down 8 and a quarter points to avoid getting a non-existent gap between the current contract and the prior contract. This is what's called back adjusting. So this table here is important in giving you the relationship between the current and the prior. It's nice that something as volatile as the NASDAQ only has 1.75 points of negative premium in it versus the Dow having 97. But just remember, I'll be quoting March today, so your numbers and mine are not going to look the same if you are looking at December. Also, in the review segment, I'll be looking at yesterday's Trader Bite levels, whereas we're talking about today's action. So yesterday's were December, today is March. So this causes a lot of confusion, but we only have to deal with this for today's session. I've considered actually skipping the Trader Bite um, on the first day of rollover today, but we can power through it. I want to remind you that derivatives trading is not suitable for all investors, and past performance is not necessarily indicative of future results. Of course, the one second. The summary sheet today, here we are, is a little bit confusing in that the overnight volume that's quoted in the summary sheet, which was released at 7:50 Central, 8:50 Eastern. The volume is being quoted as December, so we can have an apples to apples comparison. Currently, March has about 21,000 contracts in it. Let me check that. It has, oh, it's gone up to 47,000. Currently, the overnight session has 216,000. It's busy as a result of the big push that just occurred. Instead of 189,000, it's 216,000 in the December contract. The range was 21 points, but it's a lot wider now. The S&P is down 19 and a quarter points, or 0.52%. Risk off sentiment today. The key pieces is this COVID stimulus, and as well as the discussion with Brexit. Also, the ECB announced this morning that it's upping its buyback program, repurchase program. and that's impacted the European markets. We have a 30-year bond auction at 1 Eastern, a monthly budget statement at 2. Overnight, we have about 12.5% imbalance to the short side, not much to speak of on a multi-distribution profile. This is what this thing is telling us. Tomorrow, we'll have to update the sheet with the rotations of the new contract, and the volume under the new contract shouldn't be impacted all that much. But you can see the blue numbers on here is money moving into, surprisingly, crude, pushing $46. It's been rallying $46. It's one time framing up in crude after a wide-ranging day yesterday. Um, Crude dropped and came right back, and it's higher today. Gold is getting some inflows, silver, copper, and money's moving out of the top section, which is the indices, and that's how things are rolling today. The euro's higher, the Swiss franc is higher, and the pound is getting hit again, 0.76% down. So that's where we stand in the review segment. Um, in the review segment, again, this is going to reflect December prices. To translate this to March, we need to reduce the levels here by 8.25 points. The primary scenario is looking for an attempt to push higher, and then I expected it to drop down into the 3,700, poke through to 36.99, and pop back up to 37.10. This did not really work out. We ended up, there was a lot of news-based kind of movement yesterday. We ended up playing out scenario 3 here, the test higher and drop. Here's what actually happened yesterday. We tested above the 3702. Let's get rid of these. We tested above the 3702 and had our biggest impulse down. This was, again, a news-based event. Came all the way back 3697 and then started to flow down. We broke the IB low. We remained under the mid and VWAP through the entire session. We ended up taking out that 3676 half, 3677 half, I think, or 3676 half low, which has had a lot of confluence the day before. We ended up taking that out. We ended up ending, or we really ended the one-time framing up by poking through by a couple ticks. But yesterday we very loudly and clearly ended the one-time framing up. The sellers are dominant now, and we ended up selling off, unable to get back into the prior day's range, tested again on the close and finished below. This day is follows the description of a trend down day. Notice the point of control at the lower end of the range, and so we expect this to chop around in the overnight session, but we're expecting this low to be taken out. The S&P closed below 1 vol sigma. Yesterday, the 20-day historical volatility sigma band closed below it, so we expect an extension lower, and that's what we're getting right now. This is just the nature of the beast. Notice the delta, although this is representing notice the delta here is quite negative yesterday, 35,000. This is in the December contract, of course. It's showing December for yesterday here with on March's prices. So the delta is very solidly negative. We don't generally get big negative delta days anymore, and this is one of them. Here's the overnight session. You can ignore this volume. It represents the March volume. The March volume so far. The actual volume is 225,000 at the moment, which is quite heavy. Not too heavy, but it's higher than 191,000 expected. The market went sideways, pulled back, ran higher right into the cash open in Europe, and then just fell right off. We took out the low of yesterday, which was a weak low, multiple tests on that low yesterday, very weak low. That's one of the reasons I expected this to continue lower. And so it is. It's lower, and we are approaching the gap from way back. From way back at the beginning of the month here. We've poked into this gap before, right back here, but never really closed it. The other side of the gap's 36.23. And remember, down here we had 36.08 in the old contract, which is now 3600, basically 30, technically 3599.75 translated. So that's where we stand currently. The profiles multi-distribution, some active price discovery in the overnight session, expecting some volatility to come in to today's trading. This is probably a good day to monitor your risk and to to make sure you can participate versus the prior sessions, which were very quiet. So that's that. I'll show you the order flow, but the caveat here: I rolled my order flow, my contracts forward to March, even though I have full depth here using Rhythmic, my preferred data feed, the best data feed out there in my opinion. Uh, it's giving me full depth, but I'm not getting much depth because the contract's new. Everything is off today. Today for me is mainly a scalping day. I'm not looking for a lot of structure. And as a result of the rollover and the fact that I'm missing out on some of the order flow details that I would normally use, but the order flow here is not giving us very much to work with, unfortunately. Again, we are rolling to March and trading March and quoting March today. So the next segment, which is the plan for the day, is based on March prices and March stock zones. There's a lot to cover here, but I'm going to try to keep it brief. I thought for a moment I would remind everyone of the um, of the fact that everybody loses in the market. I don't believe that anybody is immune to loss. And for just a second, I thought I'd share this. This is something I posted yesterday. This was an actual trade. This is a live trade that I took. It was shorting the Nasdaq in the 3544 region against a high volume node and some decent structure after an impulse down. This was before the big drop, and because I stepped away from the computer, I put a hard stop at 12,553 in the December contract, and just like that, just as you see up here, I bought those back at the very high before the Nasdaq exploded down. Ended up exploding down immediately, about 30 points, but then dropped another 200 points or something like that, with me buying the high tick back. So this is my stop getting triggered on an OCO order. As I stepped away from my computer, high tick, and then the market moves down 200 some odd points. So to me, I just want to kind of throw it out there that this pardon the term, but this shit happens. It just happens all the time. I know a lot of people got slammed yesterday on the move down. The only defense against it is a strong risk plan. Look, if you are getting liquidated out because of your risk parameters, don't step back in, even if you have some balance. It's clear that you are off and out of alignment with the market. It is just like the French say bet. It's just dumb to step back in. How is it going to change that you're buying a big drop, the highest volatility we've had in 2 weeks? You're buying it, and somehow you're going to come back and you're going to get into alignment with the market by reinitiating your trading. And so it's wiser to just step off of, once I got hit here on the stop, I looked to stock shorts after that. But the fact is, I was kind of annoyed by the fact that I was the high tick on this trade. I think it covered 4 contracts or something, and then it just drops 200 some odd points, and I knew that I wasn't really in line with the market. The trade was valid. It just happened to have the stop. Like people like to post how they caught the high tick short or the low tick long. I wanted to just put this out there and say this happens to everybody. I'm very clear on what the market is doing and my alignment with it, but this happens to everybody. Nobody's perfect. It is what it is. Um, the best thing you can do is just step aside and let the market do what it's got to do. And it's our job to just find alignment with it rather than being upset about some trade that didn't work out. My plan here for today really has changed quite a bit with this drop. I expected this drop after the open. In fact, the biggest opportunity today was the drop to 36.42. This stock zone, this was the target for today. From the 3660s, already done. Market's already taken this trade away. The zones for today that I posted in the Convergent Head Trader channel last night, the key zones or the key boxes are 3702 way up here. There's a zone up here, 3702 to 3667. This box right in here, actually right in here, there's a box here. The 3667, 3651, hard to see where that is. This is a second box right here. This is another zone with a bigger zone at 3672, 3672 right in here, 3672 going all the way down to 3634. 3634 should be around here. This is the big zone for today, the 36.72 to 36.34. Very important. You can see the overnight. I was asleep when this happened, and I posted this last night at about 9:45 my time when I finished my homework. This zone is really important. We held the top 3673 after I posted the zone high. 3673 held. I'm looking for a box at 3672 to 3634, and then from there 3633 down here opens us up to 35.85 off the screen, way down here. If we break into this zone here, we are likely to push through and start trading the next zone, 36.33 to 35.85. And then beneath there, there's a zone 35.80 to 35.33. So the market is shifting and is trading well within these zones. And these stock zones, especially the thicker ones, are outlining where these zones edges are. It is best to define where your zones are and to stay within them. This morning, what is the expectation? Overnight inventory is much higher on the negative side. I'm looking for an open auction that responds back. I'm looking for some resistance here with this double bottom plus multiple confluence 36.51.75. I expect it to poke and then to come back in and then start exploring the gap. We're in the gap zone here. We have an old low in this area. I expect us to push the gap zone to the other side, 36.23. And if you recall, the MC point of control was at 36.28, 36.29, something like that. It's now 36.20.75. That becomes the big area here. 36.20 becomes a big balance area or test area. And we've got 52 up here to deal with. That's the primary scenario, is to respond back. They've been buying back dips. We'll see how that goes today. Secondary, we open, we immediately see liquidation on market on open. push down, consolidate on the edge of this zone, in the mid of the zone. This 36.37 is a prior high and low. If you look at your daily and put a line across in the RTH and put a line across 36.37 in the March contract, you'll see multiple confluences. I'm expecting this area to give us some support. There's the consolidation at that area on the trend down. Here, I'm expecting it to act as support to bring us back to responsive to the open, and then to start squeezing into the prior range back to the point of control at 59. In either case, I'm happy to see more range and more volume. It's unfortunate that it's happening on the rollover, but it is what it is. We take it as it comes. These are the two main scenarios. We're opening in a slight gap down. We're likely to have a pretty active open. I'm expecting people to adjust their positions coming into today's trading. It is okay to sit out the first move. It is okay if you sit out the first move and it turns out to be the low or the high of a trend day. It is okay. Your job is not to be a hero and to act immediately. Your job is to align yourself with the market and take the chances that provide you with the lowest reasonable risk. And if you do that thousands of times, in my opinion, you have a much higher probability of being successful and being here in the long run. Don't forget your risk. I cannot pound this enough into your heads. Do not ignore your risk. Every trade is your bet, your stop is your bet, is the amount you have to pay to find out if the market is in alignment with your idea of where it's going in the future. We cannot determine what that is. All we can do is determine how much we're willing to bet. It is like at the carnival. You pay your $5 so that you can have a shot at popping the balloons with a dart. We don't know if you'll pop them or not, but you know you're out $5 and you have 3 chances you might win that $20 bear or whatever it is. Same thing. Your stop cannot be seen as, oh my God, I'm wrong and this is a blow to my ego. Your stop is simply the fee to find out if the market is in alignment with your idea. And you have to get 4 pieces right. I'm not going to talk about timing because without timing, the trade doesn't exist. So time is a given. The direction, the size of your stop, the extent of your target, and the direction, the size of your stop, the extent of your target. What is the fourth? I'm drawing a blank because I'm talking too fast. Anyway, the market's about to open. You have to get 4 elements right for a trade to work out. Oh, your entry, direction, your stop size, and the target all have to be perfect or have to be aligned with the market at the time for you to get it right. This is why trading is difficult. It's very easy to get triggered on any one of these, and you have to get all 4 right to get paid. Good luck.